Obviously, we're going to start talking about U.S. Treasury bonds now, since that's what most people in the capital markets are trading. U.S. bonds are sovereign debt, and they're from a sovereign nation, the United States. Most every country in the world has, their own bond issues. Most people are familiar with German bunds or British gilts, French oats. They all have their own sovereign debt. You guys are all obviously familiar with mortgage bonds. There's also corporate bonds of varying degrees. Apple is a very high-grade corporate bond. There's also other corporations that don't have as good a financial record as Apple that sell bonds that yield much higher than the Apple bonds. Apple's 10-year note today is expected to yield about 90 basis points, or almost 1%, over U.S. Treasury bonds, which right now the 10-year note's yielding 1.66. So you're going to buy an Apple 10-year bond, if you get it today, roughly around 2.66. It's not the U.S. government. They can't demand taxes from the taxpayer like the safest instruments in the world, which U.S. Treasury bonds are, versus the corporate bonds, which are a little less safe, a little bit more risky, so they yield a little bit more than government bonds. And it goes all the way down to the really crummy corporate bonds, what we call junk bonds.